Morning, Steve Freed in Chicago with the morning grain comments. Well, we've got weaker grain prices overnight, and outside markets are also, the stocks are lower, copper is sharply lower, and we're just seeing kind of a meltdown in commodity prices overnight. I think there's some concern that the higher dollar and lower energy prices could weigh on investors' feelings about commodity prices, and if the China and Europe economy slows, that could slow demand for commodities. Over in the grains yesterday, we opened up a little bit better and then broke hard, led by corn. I think that first of all, people started diving into some of the USDA numbers and are concerned about the demand for corn, and maybe increase the overall carryout for corn. And with the funds, big longs in the market, it made the market vulnerable for a sharp sell-off. We also saw that some of the funds decided to move away from the long positions in the grains, either to cash or maybe in the equity markets, because of concern of the negative technical price action that's going on. Overnight, we did trade below $10 beans. This is a key support level from a demand standpoint. In the past, we've held these prices with consumers coming in and buying both beans and meal, but we're seeing a little bit of shift in demand of the beans to South America. There's no real big problems in South American weather, and we still contend that if the 2015 world supply of beans is record high, soybean prices are too high at current levels. So this is an important price level for the bean market. Over in the corn and wheat, we broke down below what some people thought was initial support. We could still see further price decline in the corn if the fund decides to get out of the marketplace, and that's irregardless of the talk about lower U.S. supply in 2015. And over in the wheat, despite lower prices, U.S. prices are still not competitive to the Black Sea or to Europe, and so we're just kind of watching pretty closely the developments in Black Sea and whether or not they're going to slow their exports demand down, and whether or not that reflects to any increased demand in U.S. wheat exports. The lower wheat prices offset the USDA fact that they lowered wheat acres below expectations. Right now, weather conditions, especially in the U.S., are good for the winter wheat crops. So we're sinking lower in commodity prices, we're sinking lower in the grain prices, we're at key support in the beans, and right now the fundamentals feel negative to prices. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and if you have any questions about the markets, please send them in to us and we'll get an answer back to you as soon as we can.